All right, so a quick question. What does the treasurer Josh Frydenberg, a bottle of Shiraz and a Wagyu steak, and home buying have to do with each other? Well, you might have read this week that they're looking at changing some of the responsible lending laws that were put into place when the Royal Commission went through a couple of years back. So you're probably wondering how this is going to affect you. Is it going to make it easier to buy a home? Is it going to make it harder? Well, in today's video, I'm going to hopefully break that down. I'm going to show you what sort of was, what is, and what we think is going to happen once they change these responsible lending laws around. So let's dive right in. All right, so you might have seen the article. Basically, the government's flagged that the banks have become a little bit too picky with lending and they're making it pretty hard for home buyers out there. So they've said that they're going to basically wind back some of the responsible lending laws that were put into place around the time of the Royal Commission. They're saying that, even the Governor of Reserve Bank, Dr. Philip Lowe, has said that the banks have probably gotten a little bit too strict with what they're looking at. They're putting heaps of emphasis on your living expenses and what you're doing. And you might have even seen stories, we ran a couple of videos on it, where the banks are actually kind of giving you a slap on the wrist for spending too much on Uber Eats, or even gambling is a really big one that they're just potentially saying like, no way, Jose, I don't want to deal with you. So fast forward to, probably about a year or so ago, Westpac had a pretty landmark case. So back before the Royal Commission, the banks basically didn't really check that hard about how much you spent on your general living expenses, if you had kids in private schools, all that sort of stuff. Then basically Westpac got into trouble because then what they were doing is they were just saying they're putting everyone into sort of living expense buckets. They use this HEMS index, which basically says if you're a couple with 2 kids, we probably expect you to spend, say $4,000 a month roughly. And they just put everyone in there. And it didn't matter if you're earning $50,000, $100,000, $150,000, $1 million, everyone's expenses would kind of get lumped into there. And Westpac actually initially got into lots of trouble with ASIC, the regulator, because they said, well, Westpac, you're not really checking their situation. Jayden's situation might be different to someone who's on $2 million, and you're kind of lumping them all together. Fast forward a couple of court cases, a couple of battles later, and Westpac ended up winning the case, with the judge actually saying that, someone in effect can go from eating Shiraz and Wagyu one night to really cutting back expenses and tightening up the belt if you need to. So it just meant that Westpac's kind of broad brush approach to living expenses was given the green light, more or less. So back in the day, when I sort of started broking, all the banks were pretty much asking for, and before the Royal Commission, hopefully like you can see on this screen here, over there, they pretty much just asked like, hey, Jayden, how much are you spending per month on your living expenses? You'd be like, I don't know, like $500. They'd put that in and they'd accept that. Then sort of fast forward to the Royal Commission, and the banks got in heaps of trouble. NAB got into trouble for adjusting people's living expenses and applications so they could afford more, and it got kind of naughtier and naughtier. So then the banks changed their policy because they didn't want to get in trouble. They didn't want to get more regulation in there, which ended up happening. And so they wanted people to break down, like you can see behind me, basic living expenses. And sort of we went from a situation where we'd ask someone what their monthly living expenses were to having to break it down into these broad categories, stuff like food and drinks, recreation, entertainment, clothes, retail expenditure, transportation. It was pretty broad, but it was doable. It still meant that the banks were slowing down and having to go through statements to verify this. Fast forward to the latest iteration, which came into effect a bit earlier in the year, the banks had taken this version of the living expenses and went ham. They were going back through statements. If you banked with, say, CBA and you used a credit card for your living expenses, they would reconcile how much you were spending on Uber Eats, how much you were spending on your food, on your clothes at Uniqlo, all that sort of stuff, and would actually make it fit into the statement. And it had a pretty big impact on your borrowing power. Potentially, if you were spending too much in the last few months, it could reduce your borrowing capacity by like 20 to 30%. It's pretty huge, and there really wasn't a way around. It went even further, and if you had investment properties, like I mentioned before, if you had kids in private schools, they would take these fees out. And if you're earning $100,000, your kids are going to private school, it's 20 grand, that takes a fair chunk of your borrowing capacity out. Fast forward to the Shiraz and Wagyu case, to the government's latest changes that were sort of published in this article. There's going to be a lot of changes. So really, I guess you're probably wondering what's next for these responsible lending laws and how's it going to help you get into your home into the future? Well, I think the first thing it's going to change is it's going to speed up the home lending process. So, like I said, the banks at the moment will go through, they want statements on every account that you have, every credit card that you have, and they'll go through them line by line and then reconcile it back to one of these tables that we have to fill out and make sure it all kind of makes sense. So, if they're going to go back to the old way of just kind of looking at your monthly living expenses, the first thing that's going to help you out with is it's going to make the home loan application process way quicker. Banks like ANZ that were taking 6 to 8 weeks to process stuff a bit earlier in the year are going to speed up and clear some of that backlog. The second thing I think it's going to help with reducing some of these responsible lending laws is it's going to mean that you're going to have to give less info. So again, back when I started broking, you'd pretty much just do like 2 pay slips, you'd show them your ID, maybe you show them a bank statement, show your deposit, and that was it. Today, they're asking for statements and everything. So I think the changes to these laws are probably going to wind back some of that, and it's going to make them less stringent on their paperwork and sort of take stuff at face value. The third thing I think, and the biggest thing it's going to really help out with, is realistically, it's going to potentially increase how much you can borrow and give you a bit more borrowing power. So if you're in like a tricky job that might be casual or using overtime and where the banks would have been pretty harsh about your living expenses, now they get it and they say, well, just because you're spending a bunch going out and having fun and playing with your friends on the weekend, whatever, once you have a home loan, we get that you're going to pull up your socks and you're probably going to tighten your budget and be a bit more sensible. So that's what I think. They're the 3 things. There's been a bunch of subsequent articles of people like, oh my God, it's going to push debt up and house prices up, and what's going to happen is it going to be like in America. Fortunately, we had these laws when the GFC happened. The banks weren't looking at our living expenses then, but they're still pretty stringent with stuff around your income, stuff around your overtime, your bonuses, all that stuff. So it's not like the banks are going to start just writing blank checks. They're still going to be doing their processes. They're going to be making sure you actually can afford it. And ideally, they don't want your loan to go bad. They don't want you to go kind of belly up on your payments. So there's still going to be lots of checks and balances there. You're still going to need, your savings. You're still going to need your deposits. There's going to be no skirting around that. But I definitely think it's probably just going to make it a little bit quicker, make it a little bit easier, and mean that you can borrow a bit more than what you can probably today with these really rigid, responsible lending laws. So that's it for today, guys. Hope you liked the video. If you did, give us a thumbs up or leave a comment below. Love to hear from you.